Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we're going to talk about price patterns. So it's the beginning of what I'd like to call a price pattern triptych. We're going to take 3 weeks to talk about price patterns. Today we're going to focus on flag patterns. And that has been both encouraging and an exercise in frustration. And I'll explain that in a little more depth, but we're going to, kind of go through the basics of what a flag pattern is and how some people might choose to trade it. So I can see that a lot of the usual suspects are checking in and, kibitzing with Mr. James Boyd. By the way, James has today off. So I hate to be critical, but you kind of suck at taking a day off, James, because he taught this morning. He's now in my chat. I guess it's a half day, but that's a pretty big half day. So I guess he just couldn't resist us. So we should be flattered, right, guys? So James, thanks for being in the chat. We're, grateful to have you here. You always bring both a lot of expertise and a lot of humor to everything that you do, and we appreciate that. And we've got Rob and Josh and Kevin and Rachel and Sharon and Will and the rest of the gang in here, JDLMI and Jay. So kudos to all of you for continuing to show up and hone your skills week after week after week. I appreciate it. If you are not following us in the land of X, consider this your formal invitation. At Barb Armstrong CS is my handle on X, at James Boyd CS. And James is a prodigious poster. He posts on occasion, several times a day. So you're really missing out. If you're not following us on X. I'm also now in the land of LinkedIn. Are you on LinkedIn, James? Go ahead and type that in if you are. So wander over and you can find a lot of the coaches on LinkedIn now as well. They're kind of legging us in, if you will, to LinkedIn. So you can find us there. This is a technical analysis class where we're going to look at lots of charts today. If there's a bull flag chart you want us to look at, go ahead and you can type that into the chat and I'll try and make a note and we'll cover it. I'll keep my notes handy here. But, we're going to look at a lot of stuff today. Know that it's for general information purposes only, none of it to be construed as a recommendation on the part of Schwab or myself. Also know that, if we discuss options carry a high level of risk and aren't suitable for all investors. So we need to keep that in mind and make sure we understand the risk we're taking. We're using the paper money software application on the thinkorswim desktop platform. That is a brilliant place to learn and hone your skills and your trading strategies and make sure you understand both the platform and your strategy before you consider trading in a live account. Okay. So I have designed this class to be taught in about a 9-week rotation. And you can see here, when I said we're starting this triptych, if you will, this 3 weeks where we're going to be talking about different price patterns. So this week is flags, or as James says, maybe he had a little speech impediment or something growing up. I'm not sure. Fleags. And then we're going to go to pennants and triangles, and then channels and reversal patterns, where we're going to talk about, double bottoms and cup and handles and head and shoulders and inverse head and shoulders and all that good stuff. And both James and I are posting a lot of patterns, charts with patterns on X on a regular basis. And then, in and through this 9-week rotation, we will often insert additional bonus classes. And so by the time we're all said and done, a rotation may be 12 to 13 classes. So there you have it. Okay, so today is Flag Day. And so we're going to look at what a flag pattern is. We're going to look at several examples. On the charts. And then we're going to also place an example trade. The person who taught this class prior didn't tend to place trades. It was more looking at concepts. I always like to place at least one trade. And you guys in the surveys, when there is a survey, are often saying, give me more, but we are never going to place the 3 to 5 trades that we typically place in, say, trading a smaller account or some of the other classes. Somebody's saying, which class is today? Well, this is getting started with technical analysis. I am also going to be teaching the swing trading class, which is the next class up because Mike Fairborn has a well-deserved day off. It's a beautiful day here in Salt Lake City. It's cool and it's sunny, and he's a big, he's very big on cycling, and so I hope he gets to get out and ride today. But anyway, back to our topic at hand. This is a bull flag, and a bull flag is a bearish pattern. And you know, I've had people type into the chat and say, like, well, does this work on a daily chart if I had like a 5-day, 5-minute chart up? Or what if I had a 5-year weekly chart up or a 20-year monthly chart? A trend is a trend is a trend. And so this concept works over all time frames, okay? Yeah, so Cooley is asking where you can find the session on candlesticks, and I'll show you that in a minute. And James, if you could post a link to that class, that we taught that last week in this class. Okay, I also posted some kind of summary sheets on X on candlestick patterns. Okay, so, but the idea here is that we have an uptrend and then we have it pull back for a few days. And then what we're looking for with this chart is, and let me just make this a different color. So we've got this, oops, now I have to, I guess I'm a little remedial today in we're just going to make that a drawing tool. So when we have our uptrend and pullback, what we can see here is here was our low day. So here is our low day. And what we're looking for is a close above the high of the low day. Or we're looking for a candle pattern that indicates that this pullback may be complete. Now we have a hold on this. This particular pattern, if we go back to our candlestick conversation of last week, is also a bullish engulfing pattern. Okay. So that's also a bullish engulfing pattern. And so we're looking for this, you know, one, we have the flagpole, then we have this, you know, short-term downtrend. And what we're looking for, if this, you know, because this is a continuation pattern, is that we have a high and a higher high and a low and a higher low. And if we're looking for to establish a target with these, often we'll say, well, if this is, say, this is, you know, a $10 long pole, we might expect that this next pole from the low would also be $10, and we could establish a target that way. And so if this went from, say, this went from 40 to 50, this went from 40 to 50 and pulled back, our low was 47, then our next target might be 57. So that's a flag target. And we're looking to enter when we have this, you know, break of resistance. So you could draw a line, this break of resistance, or that close above the high of the low day. Now, another target, so that's one target. Let me clear that just to make it easier. So target is, you know, the length of the flagpole, that's one target. We could also do what we call a swing target. And that's the topic of the next class. We have a whole class dedicated to swing targets. Now, can we only do this with stock, or can we only do this with options? You can do it with either one. But you don't always have the opportunity to set a swing target, you know, unless you have something like a flagpole pattern setting up. If you have something like this, like say NVIDIA was doing for quite some time, about 8 months, you know, it was going sideways, and then it came out and it broke up. Well, I can't set a swing target because, you know, it's broken out to a new high. So, and if you're hitting an all-time high, it's pretty hard to set a swing target. So there are opportunities sometimes for these, and then other times there aren't. And so that's why we talk in this class about all kinds of different ways to establish targets. And of course, I often say, with respect to example trading plans, for example, we can also take this flag and we can flip it and reverse it. And, my son, when, he's now 30, but when he was young, he had this big American flag. He also had a Canadian flag, but he had this big American flag that I had put in a frame in his room, and I had pressed it, and it was hanging over the couch, but the edge of it was touching the ground. And whoa, did I catch what for that? Because I was told how disrespectful it was. So these flags we can handle with a little more wild abandon. But here's a bearish flag. And so, we've just kind of flipped it and reversed it, right? But the same thing, if we measure the length of this flagpole, that this could be a target. Now, let's say we have this at 10 and we're expecting this move to be 10. Well, ultimately, maybe this move was 10, but in between it kind of rallied. And that may have, caused some people to exit that trade earlier. But so this is a flagpole target, but we could also have a swing target. And in this, if we're flipping it and reversing it, so this would be our target 1, which would be a swing target. A swing target. And then this would be our flagpole target. And so, this pattern can help us set a target. It can also help us set an entry. So the entry for the bullish flag was a break of resistance or a close above the high of the low day. When we flip it and reverse it, we're looking for a close below the low of the high day. Wrap your head around that. And so if we look at this example here, so this came up and then, here was our high day here, and we were looking for a close below the low. Here was our low. We were looking for a close below the low of the high day. So this would have been our entry, on this day here. Okay, close below the low of the high day. Now here, this is a bearish candle, but this was our high day. And so here we were looking for a close below that low of this day, which would have been this day that's covered by our red line. And then if we came down here, here was our high day. We're looking for, this would be our close below the low of the high day. Whoops. Close below the low, CBLOHD. Some people call that a CBLOHD. So if you're wondering why people are making up words, it's because it's what we do. I didn't make these words up. I will say that. Okay. And so our target, it can be a swing target or it can be based on the length of the pole. And our entry, a break of support or that close below. And these aren't mutually exclusive. This is a break of this support level, and it achieved that with a CBLOHD. That's an H, not an A. Okay. And so we're seeing, lots of both of these on the charts, and this is obviously bearish. Okay. Are there any questions on this? I know that like Will and Riceberg and Paul and Frank, like you guys, you could be up here teaching this. Maybe we should have a guest, teacher day, which is, and as many of you know, I started as a client. And part of the reason that I took this, it's like, well, just a minute, like this used to be not free. And I thought, okay, you're going to pay me to figure this out and help other people like figure this out too. Like, what a cool experience. Like, how can I say no to that? Plus, I so believe in this stuff. I'm so passionate about it. And to me, like I wouldn't place a trade without looking at a chart, but that's just me. Other people always look at the probabilities. And so teaching getting started with technical analysis is kind of a good fit because I'm a chart person. I'm a very visual person. And so for you visual people out there, let's go out and look at some stuff on the charts. And I want to start with the S&P 500. And why do I want to start there? Well, because we're teaching this and we want to look at what's going on in the markets. And then we want to apply what we're learning in the markets overall, right? So if we look at this and we say, okay, we've had this big move to the upside. And could we call this, a flag? So let's just, let me bring up my drawing tool. We're going to change our color. How about we go blue? So moved up, we had a 1-day pullback. Sometimes that's all we get. Then it came up. We had a 2-day pullback, came up again. And today we're pulling back. And what we see with these flags is they aren't always going to be the same length. But we're seeing a series of higher highs and higher lows. And, this is, so we're pulling back today. We're down 0.5%. So this is setting up a bull flag. But do we have that close above the high of the low day on this index yet? We do not. And so if we wanted to trade this index and we were looking for a confirmation, this candlestick pattern, this doji requires confirmation. So, a technician who's, steeped in the lore of candlesticks would say, I would like to see a close below either the high of this low day or I'd like to see it close above the body of this candle. Okay. So let's come and look at the NASDAQ. And, somebody said, Charles says, like, her story gives me hope. And let me tell you, I did not, like, when I found this, I was so excited. My car could have driven itself home. That was back in July of 2011. I'll never forget it. And I'm now working with the people that introduced me to all of this, which is super cool. But I just committed to spending an hour a day. And then sometimes I do some binge learning, on the weekends, but I committed to an hour a day and I pretty much stuck to that. And it's kind of like going to the gym. You can't just go to the gym once a week and spend 5 hours and think you're going to get where you want to go. But if you spend an hour a day and you're consistent over time and you look at mastering one strategy at a time. And if you're new to this, guys, type a greeting into the chat so we can welcome you to this community. But know that we're all linking arms and continuing to learn this together. And in the beginning, it could be a bit like drinking out of a fire hose. But if you keep coming back, it just, like, you'll be amazed at how much you learn in 3 months, in 6 months, in a year. And I'm continuing to learn new things all the time. Don't tell James, but I am. Okay, so in the NASDAQ, are we looking at the same kind of thing here? We broke out above this high, hit a new all-time high on this index yesterday. And I mean, look at this. Like, this is like nuts. Like, that's an extraordinary move. 1-day pullback. And then, this is kind of almost an anomaly here. I draw it like that. And so, when we look at this, I kind of look at this and say, well, what am I going to see when I start going out to the charts? And what frustrated me, I will just full disclosure here, is that I saw a lot of this kind of pattern that isn't complete. And I like placing example trades because when I was a client, that's what I wanted to see, in all honesty, is like, show me the money. And so I'm going to show you how to place a conditional order also. Okay. So where we don't quite have the setup yet, because, this candle pattern is not complete in that we have the pullback. And what I think makes this candle particularly bullish is that it opened lower and it's trading higher. It's still down 1%, but that's kind of like a bullish sign pour moi, that, it didn't open and continue to fall. It has opened and, it's kind of gone up and down a bit, but it's continued, it's continued to rally. Clear my drawings. Throughout the day. And so this is a live candle, but you won't be surprised then when we come and we see, this kind of thing setting up on the charts. So if we look at Micron, how similar does that look to the NASDAQ, my friends? Yeah. So let me just switch this from a 1 year to a 6 month. So, if this is bull flag day, it's official. I should have grabbed my flags. I did save a Canadian flag. They didn't all go over to James. I saved one or two. So bull flag, but we don't have an entry yet. But if we look at this, we're on the other side of earnings. And if one were bullish on Micron, could we say, well, I am bullish, but I don't have an entry yet, but I'm going to look at today's high at 518.83. And we could put in a conditional order and say, you know what, like based on this pattern, some might, say, well, I could expect a move from here to here, and I'd kind of hate to miss it. And so could we look at this and say, well, we had a support level here around 469.57. So I'm going to look at 469.57. I'm going to go 3% below that. So I'm going to put a stop in. If we did this as a stock trade, just a trend trading growth stock. But I only want to get in if it goes above 518.83. And you might say, like, are you nuts? Like, why would you want to do that? Well, because if it pulls back for another few days, I'm going to look at this on a daily basis. And if it doesn't go get me in tomorrow, if it pulls back again, then I'd put my entry in to be if it goes above the high of that day. So I'm going to make this 519.83. I'm just going to make it $1 higher than today's high. And we have $500,000 in this account, and we want about a $25,000 position. So we don't buy 100 shares, we buy 50. Okay. And so we're going to come to our trade tab. We're going to right click, and we are going to buy custom with an OCO bracket. And how many shares are we going to buy for this example trade? We're going to buy about 50. And then when I click this firecracker and turn it into a paper clip, when I then click anywhere else on these lines, it immediately lines up the volume. And, oh, we aren't going to put a target on this one. Sorry. So we're going to right click. We're going to buy custom just with a stop, because we're going to continue to be in this if it continues to go up. So we're going to put our stop in at 455.48. 455.48. And we're going to make this a market order and say, hey, when this goes above 519.83, this brings up our conditional window. We can also do this as a buy stop, but somehow for my brain, this just makes intuitive sense. 519.83. So when we come to confirm and send on this, oh, now it's back to buy 100. We don't want 100. That's too big a position for our account. So we're going to make it 50, not 150, 50. Okay, confirm and send. So we're buying 50 when and or if it goes above 519.83. Now, if Micron continues to pull back, we won't get into this trade. And so it's kind of this can be a double win because it can prevent us from making a trade that would have not been profitable. And it can also help us get in immediately if it does go our way. Okay. And, we want, and now if we're wrong and we do get in and then it pulls back, we want to get out at 455.48. And we're going to put this in our growth stock group. And that's a $25,000 position, which is right around where we want to be. Okay. Yeah, we're going to look at some bear flags also. Now, somebody had said INTC was looking good. So INTC was the second one. And, this is kind of variations on a theme, right? So let me get rid of these drawings. Because when we look at this one, again, we have this bull flag, like, whoops, quite an extraordinary move for this stock. Comes up, bull flag, sorry, it's not a very straight flagpole. And then it gaps up. And this is where we can get, it can kind of take our breath away. So with these, like an order like I put in today, that says, hey, if it goes above this, get in. And if it gapped up the next day, we'd be in at a much higher price than we were expecting. So you may want to check just before the market opens to just see. And then it pulled back today, but we can see it's similar in that we've had this rally. Yeah. So, and somebody's saying, this is kind of too stretched. I think I'd wait for more of a pullback. And you can wait, but it may mean that you don't get to play, that you don't end up in this trade because this may be all the pullback that we get. And so you could say, well, because it opened down here and it's rallied pretty dramatically throughout the day. We're still below where we closed yesterday. But this is an $84 stock. We're below, under like 0.75%. And so you could put in a conditional order and say, hey, if it continues to go up, get me in. Or you could just say, yeah, on this one, we are going to pass. Okay. Let's look at, well, NVIDIA, if you were in James' class this morning, and if you weren't, you may want to go back and watch the recording. We were trading this because it was going sideways like for like almost 9 months. This is a 9-month chart. Like starting back in September, it was kind of trading in this range. And then it broke out, and kind of went sideways. It's kind of like, oh, I made it through the ceiling and now I need to rest for a few days. So it kind of had a few days rest and then has moved up. And again, we're seeing, so this is what I call, and I'm not the only one, I got this name from someone else, so I can't claim it as my own, but a bull flag and a stiff wind. And then on this day, we had both a close above the high of the low day and, a breakout above resistance. So it's kind of a 2-for-1, and then it moved up dramatically again today, pulling back. So could you put in a conditional order? Because this is kind of a bullish pullback as pullbacks go, right? Right. Just nod your head. And not that I can see. Okay, how about we look at AMD? Like, does this look familiar at all, guys? Like, it's not the NVIDIA chart. So, I can get rid of this because that obviously hit our target. But we had this big double bottom pattern. Now, a technician might have said, well, I'm going to make my target. If this went from 190 to 265, I'm going to add, that's about a $75 move. So if I took 265 and I added $75, that would be 340. This might have been a target someone might have put in based on the width of this pattern, which isn't today's topic, but there's 340 and we would have hit it on Friday. Like, isn't this just so cool? I just find it fascinating. And that's kind of based on this idea of measuring, and we're going to spend a whole day talking about this. Like, if this is about $75 wide, the next target could be $75 above. And like, Heidi ho, look at what happened. Kind of cool. Okay, so, but we're talking flags. So here we come up. And often we have patterns within patterns, right? So within this double bottom pattern, we have this flag. We get a whole whopping 1-day pullback. And then we come up and we've got a 2-day pullback here happening on AMD. But again, it's a pretty bullish pullback as pullbacks go, in that it opened way lower than what it's currently trading. And so to me, this is a bullish red candle, in that, you know, when I hover over this, and I tend not to hover, just saying, but this one opened at 311. It's now trading at almost 326. So it's trading $15 now higher than when it opened. So obviously when it pulled back, a lot of buyers said, man, this is on sale, may not last long. And they came in. And so if you said, you know, I'm pretty bullish on AMD as well, for whatever your reasons might be, you know, and we aren't going to go and look at the, you know, but we have earnings coming up. And you might say, I could see this, you know, taking off after earnings. It could also gap down. So, you know, with earnings, like there is a risk, but you could put in a conditional order to say, if we have it trade above this high of this low day, get me in. Now, I've already shown you an example on that. I'm not using a Bollinger indicator, but that's a great topic for another class. And if you come and look at our playlist for this class, you will see that I think Rachel was filling in for me one day, and her topic was Bollinger Bands. And so if you want a getting started with technical analysis class on that, you can bring that up. And you know, I will make that a special class. But when you come to Trader Talks, and this getting started with technical analysis is what's currently being taught. But if you come to playlists, for some reason, and I know not why, it wasn't me organizing this, I'm just saying, the getting started classes are down here at the bottom. And so here is getting started with technical analysis. And for the person who said, you know, can you show me the class on candlesticks? Here we go. And I'll put the link in. I will put the link in to the entire playlist in the show notes down below if you're watching this in the archives. So there's the link to that class on candlesticks. Okay, so any class that you want to see, you've got there. And then if we wanted something on Bollinger Bands, so we could come back out here and just type in Bollinger Bands, or you could scroll down. And I know that that Rachel has covered that in this class, getting started with technical analysis back in November. And so I will click this and I'll put in a link. I'll put in a link to that as well. So this is Bollinger Bands for those, whoops. So there you go. There's the one on Bollinger Bands. But if you haven't subscribed to this channel and you're new, and I saw a lot of people come in and say that they were new, so welcome, welcome. And you know, just keep coming back. And the cool thing about these webcasts is, you know, you can do some binge learning. And if you want stuff that is quick and I want to say quick and dirty, quick and clean, We have clean humor around here, right, James? Um, sorry. I can scroll. I've got the skills. Here are these mini sessions. So, if you wanted to do some binge learning on candlesticks, there's 13 in the series so far, and they're all like 5 minutes or less, most of them, some of them 3. You can come here to the mini sessions and catch on to those. Okay. Okay. So I don't want to neglect the downside, but I do want to show you an actual, well, for crying out loud, it was a legitimate entry and now it's not. How about we look at CN? That's another one. Do you see this pattern? Boeing. One to kind of keep in mind, we had this V pattern, look familiar? We saw that on the SPX and these other indices, setting up a bull flag potentially, but we don't have our CAHOLD yet. Our STX. Variations on a theme, right? Like we've got this 1-day bullish pullback, may want to keep an eye on that. Okay. TXN. Gapped up, this not quite a piercing line, and I forget what we call it, dark cloud cover. It should come halfway back through this candle. So it took 3 days to do that. But could this be, a bull flag setting up? It could be. But we don't have that CAHOLD yet. Waiting on CAHOLD, not waiting on Godot, waiting on CAHOLD. Another, and here's one, where you might have been tempted to be preemptive and say, well, like I've got this doji pattern, it's looking good, I'm just going to place the trade. And then the next day, wham. It's like, you know what you get for not being patient? Yeah, you get hammer smashed. NXPI, since it hit consolidated here, then we started bull flagging it. And what are we waiting for? Close above the high of the low day, a break above that resistance line. Now, the same thing happens when we flip it and reverse it. So let's come to our little friend Lulu. So Lulu has been, doing a lot of rolling down the hill. And, so we're seeing bear flags happening. And then, so I would say, here we go, bear flag, bear flag. Now, is this here? And then what happened? Well, this kind of, ruined this nice bear flag continuation, because one of the things we're looking for is lower highs and lower lows. And then this kind of became a higher high and consolidated. And then it's like, oh, are we now resuming a 2-day? And today, this would be considered an entry. So let me get rid of my squiggles and, but why? So why aren't we placing a trade? Well, because the overall market is bullish. It doesn't mean that this may not, continue, but, we don't, to have a swing trade here, it's at 143, to go to 141 isn't much of a move. So this is a case where you might want to use this flag target. So maybe we'll use that as an example in the next class, because we're talking swing trades. Yeah, in Mike's class. Okay, and then how about Gilead? We're coming to the other side of the tracks, and this looks kind of prettier in a way. Like if we just kind of look at the overall theme of Gilead, it was up pretty nicely. I mean, it's still up 5% year to date, which is almost surprising. When we look at this, it's still up 5%, but man, it's given back a lot. And then it's come down and it's come up again, come down. And it looks like it may be setting up, because today we're up almost 1%. Could this be setting up another bear flag? Could be. Okay. So let's just look at one or two more examples, and then I've got to cut you loose because, yeah, our time is up. It's hard to believe. 45 minutes, it feels like a lot of time, but it goes pretty fast. Dash. And this one again, we had a higher, a low. This is a slightly higher low, but we've seen a lot of bear flags within, the last 8 or 9 months with Dash. Ooh, excuse me. Dollar Tree. Kind of the same kind of thing, right? Like, it tried to rally, fell down, tried to rally, fell down, tried to rally, falling down. And, here we would have, this is a bearish engulfing pattern. Okay, so guys, I hope that you have found this helpful. For Gilead, would you confirm the possible entry? So for Gilead, if you wanted to place that trade today, if you were doing a conditional order, you would say, well, today's low was 128.34. So if you wanted to do a bearish trade like buying a put, you might say, please buy this put if the stock goes below 127.84. Or you might make it 50 cents below today's low. But then if it goes up again tomorrow and up again the day after that, you're going to want to change your entry to be an entry if it closes below the low of whatever the new high day is. Okay? Okay. Great question. I really like the way you guys are thinking. Yeah. Yeah, and Lulu might be, consolidating. But it doesn't mean the trend is changing. It could be consolidating and then the trend could continue, or it could be consolidating and then we could have a trend reversal. And we'll kind of look at examples of both of those in the next 2 weeks. Okay. So that's a wrap for today. We looked at a lot of different examples of flags on the charts. We did an example trade with a conditional order on, let's come to our monitor tab, on Micron. And then, here's my ask of you is, if you're new to this class, please feel free to keep coming back. If you've missed some classes, you can catch them in the archive. So you'll want to subscribe to the channel by hitting that button in the bottom right corner if you haven't done that already. If you hit like, that lets James and I know that you found this content valuable. And so you can then, yeah, so if you hit like, it moves it up in the algorithms on YouTube so more people can find this content. So you could be doing a random favor for a stranger whom you may never meet without even leaving your desk. So how cool is that? And then follow us in the land of X, James Boyd CS, Barb Armstrong CS. And that's a wrap. If you'd like a little bit more like advice, or not advice, but learning from Barb, you can stay tuned. At the top of the hour, I'll be coming back with swing trading. And then I'm filling in for Connie on Thursday with long verticals and diagonals. And then we have a big investor day coming up on May 1st on Friday. So in lieu of our regular content, we'll be having all kinds of special content. You'll want to make sure that you tap into that as well. So thank you for joining me today. Stay tuned. Swing trading coming up next. Thanks to James and the guys behind the scenes for helping bring everything to life. Bye for now.